For centuries, gold has been the ultimate symbol of wealth and stability. It has outlasted empires, currencies, and economic collapses. But what if I told you we are on the precipice of a new golden age? We are not talking about a simple price spike. We are talking about a fundamental, global shift that could redefine the value of this ancient asset. The year 2026 is emerging as a perfect storm, a convergence of economic, geopolitical, and technological forces that could propel gold to heights we've only imagined strap in, because the journey to the next great turning point for gold has already begun. The foundation of this coming storm is debt. Global debt has soared to unprecedented levels, a towering pyramid of IOUs that governments can never hope to repay through traditional means. This creates an unsustainable reality. When debt reaches this extreme, history shows us that central banks have only a few desperate options left. The path of least resistance becomes devaluing the currency, making money cheaper to ease the debt burden. In a world where the money in your pocket is being deliberately devalued, what retains its worth? The answer, for millennia, has been gold. We felt the sting of inflation recently, but this may just be a prelude. The massive stimulus injected into the global economy during the pandemic was a sugar rush. The hangover, persistent inflationary pressures could last for years. By 2026, structural forces like deglobalization and the green energy transition will create continuous cost-push inflation. Central banks will be trapped between raising rates to fight inflation and crashing the economy, or cutting rates and letting inflation run wild. In both scenarios, gold, the classic inflation hedge, becomes a vital life raft. The world is fragmenting. The era of globalization is giving way to a new era of blocs and alliances. The ongoing tensions between the US and its rivals, notably China and Russia, are creating a bipolar world. In this environment, the US dollar's supremacy is no longer a given. Nations are actively seeking ways to conduct trade and store wealth outside of the Western financial system. This de-dollarization trend, while slow, is real. Gold, being neutral, apolitical, and universally accepted, is the prime candidate to fill this void, especially for central banks. This isn't speculation, it's already happening. For over a decade, central banks, particularly in the East, have been net buyers of gold. China, Russia, India, and Poland are leading a silent flight to safety, repatriating their gold and adding to their reserves at a record pace. Why? Because they see the same storm clouds we do. They are preparing for a world where gold's role in the international monetary system is significantly enhanced. By 2026, this sustained institutional buying will provide a powerful, non-negotiable floor under the gold price. The most explosive potential catalyst for 2026 is the continued rumble of a BRICS-backed trading currency. While a full-blown gold-backed currency is a complex challenge, even the credible discussion of it changes the game. If the BRICS nations begin to settle more trade among themselves using a unit of account linked to gold, it would create an instant, massive new source of demand. This would effectively remonetize gold, pulling it from the periphery of the financial system and placing it back at the center of global trade for the first time in decades. On the supply side, we are facing a phenomenon known as peak gold. The era of easy discoveries is over. Major new gold deposits are exceedingly rare, more expensive to find, and often located in politically challenging jurisdictions. The cost of production, energy, labor, equipment continues to rise. By 2026, it is highly plausible that annual gold mine production will have plateaued or even begun a structural decline. When soaring demand meets stagnant or falling supply, the fundamental laws of economics point to only one outcome: a significantly higher price. Gold is not just money, it is also energy. The process of mining it is incredibly energy intensive. As the world pushes for a green transition, the cost of energy remains volatile and likely to trend higher. This creates a powerful feedback loop. A higher gold price is needed to justify the energy cost of mining more gold, but that higher energy cost itself makes gold more expensive to produce, thereby supporting a higher price. This energy-gold nexus creates a built-in inflationary pressure on the metal's fundamental cost of production. The 2008 crisis planted a seed of doubt. The GameStop saga and the rise of cryptocurrencies further eroded trust. The public is increasingly aware that the stock market can be manipulated and that the system is rigged in favor of the elite. Gold represents an escape from this matrix. It is a tangible asset that exists outside the digital ledger of the banking system. This loss of faith is not a fleeting sentiment. It's a deep structural shift that drives a new generation of investors toward apolitical, non-counterparty assets. Don't mistake crypto for an enemy of gold. It is, in many ways, a bridge. Bitcoin is called digital gold for a reason. It shares the attributes of scarcity and decentralization. The rise of digital assets has educated a new, tech-savvy generation on the importance of sound money. This sets the stage for a powerful synergy. The emergence of tokenized gold, where each digital token is backed by a physical gold bar in a vault, could make gold accessible to millions more, creating a tidal wave of new demand by 2026. The 2024 US election is over, but by 2026, the fiscal consequences will be in full view. Regardless of who wins, the US national debt trajectory is on autopilot entitlement. Spending is untouchable, and political polarization makes meaningful fiscal reform nearly impossible. The likely path is more deficit spending, funded by more debt creation. This continual dilution of the US dollar's value forces global investors to seek refuge. Gold stands as the ultimate judge of fiscal irresponsibility. The largest generational wealth transfer in history is underway as baby boomers pass their assets to millennials. This coincides with a looming retirement crisis where many find their 401ks insufficient. There is a growing awareness of the need for true wealth preservation, assets that can't go to zero. Gold is being reevaluated not as a speculative bet, but as a core, permanent holding in a diversified portfolio designed to protect savings from systemic risk and the erosion of inflation over the long term. The increasing frequency of climate-related disasters highlights the fragility of our modern digital world. Hurricanes, floods, and wildfires can wipe out digital records and disrupt supply chains. In a true crisis, digital wealth can become inaccessible. Gold's value is in its physical, indestructible nature. It doesn't corrode, it doesn't need electricity, and it holds immense value in a very small form. As climate anxiety grows, so does the appeal of holding a resilient, tangible asset that can survive any disaster. From a technical analysis perspective, gold has been building a massive, multi-year cup and handle or similar long-term base. A decisive breakout above key resistance levels, such as $2,500 or $2,700 per ounce, would be a seismic event. This would trigger a flood of algorithmic and momentum-driven buying. The psychology of the market would shift from if it will go higher to how high it can go. By 2026, this technical breakout could be fully realized, creating a powerful self-feeding rally. Let's talk about scarcity. All the gold ever mined in human history would fit into just 3 Olympic-sized swimming pools. Compare that to the trillions upon trillions of digital dollars, euros, and yen that have been created. This visual is staggering. When investors truly internalize this scarcity versus the vastness of fiat currency, the perception of gold's value changes. It's not a commodity, it's condensed, immutable wealth. This scarcity mindset will be a key driver as we approach 2026. The freezing of Russia's foreign currency reserves was a watershed moment. It demonstrated that assets held in another country can be taken away with the click of a button. This weaponization of the global financial system has sent a chilling message to every non-aligned nation. Diversify or be vulnerable. Gold held within your own borders cannot be frozen or seized digitally. This has triggered a strategic non-economic rush into gold that is likely to accelerate, peaking in its effects around 2026. The next generation of investors, millennials and Gen Z, are not blindly loyal to old paradigms. They are digital natives, skeptical of institutions, and deeply interested in value investing and history. They discover the story of gold through podcasts, videos, and financial forums. They see it not as a relic, but as a radical form of financial insurance. This generational shift in perception is creating a new, long-term, and dedicated base of gold buyers. Individually, any one of these factors would be noteworthy, but by 2026, they are converging. The debt cycle, inflation, geopolitical strife, central bank buying, supply constraints, and a loss of faith in the system are not separate stories. They are threads being woven into a single, powerful narrative. It's the synthesis of these catalysts that creates the potential for a parabolic move, a turning point that will be studied in economic history books for decades to come. So, what are the key signposts on the road to 2026? Watch central bank buying reports from China and the BRICS nations. Monitor any official announcements regarding a new commodity-backed trade currency. Keep a close eye on U.S. fiscal policy and debt ceiling debates. Watch the inflation data, not just month to month, but the underlying trends. And finally, watch the technical price action. A sustained breakout above all time highs will be the clearest signal that the new era has begun. The world is changing at a breathtaking pace. Digital currencies, AI, and geopolitical realignments are creating a future that is uncertain. In this uncertainty, gold's timeless qualities shine brightest. It is not a get rich quick scheme, it is a form of financial armor. The forces aligning suggest that by 2026, the world will wake up to this reality on a grand scale. The turning point is not just about price, it's about the rediscovery of gold as a bedrock of a truly resilient financial life. Prepare accordingly.